My name's Dave DeBow, founder of MoneyPartnerFormula.com, and this show is built for everyday real estate investors who are actively doing deals and looking to scale using other people's money. So if you're an active real estate investor and you want to get featured on this show to talk about your own real estate and capital raising experiences, then just go to daveinterviewyou.com. Now let's get rolling with this episode, and remember to subscribe for daily interview content. Welcome back, folks. Today, our special guest is a syndicator, a multifamily guy. He's zooming in from Atlanta, Georgia. Clive Davis has been in the real estate game since, 2017 with his company, but he's been doing it longer than that, and he has a very interesting backstory. Clive's one of those smart guys. Clive was a lawyer, big-time lawyer, corporate lawyer for a long time. Went to one of the big schools. Sorry, Clive, I forget which one, but it was
Columbia for law school.
Yeah, Columbia is pretty big. I'm Canadian. I even know Columbia is a big law school, so that's pretty impressive. But these days, he's full time into real estate investing. So, Clive, welcome to the show. Great to have you.
Thanks for having me on, Dave. Looking forward to this discussion.
So let's zoom out for a second right now, if you don't mind, Clive, and let us know what you're investing in mid 2025. What does the portfolio kind of consist of right now?
In terms of what I'm investing in, I'm a little bit more defensive these days than I've been in prior years, and no surprise, commercial real estate has been navigating some, let's just say, rough weather over the last couple of years, and I'm no exception to that. So that has had me be a little bit more conservative and defensive in terms of managing the existing portfolio. The existing portfolio on the multifamily side is comprised of a couple communities here in Atlanta, a 244 unit, a 200 unit that I'm kind of the lead on from an asset management standpoint. I'm also involved in two developments, also in the greater Atlanta metro. One is a 142 unit multifamily 8-story development. After almost 3 years of pre-development, we broke ground last year in early December.
Congratulations.
And we're now, thank you. And I've learned a ton over the last almost 3 years about navigating the capital markets for ground up construction, which is a very different animal than going and, when I buy a multifamily deal, I know start to finish, we're looking at plus or minus 90 days, and either the deal is going to be done or it's not. When you're operating on the ground up construction side, you've got pre-development, which is its own journey unto itself, which only entitles you to get to the start line. And then the race begins. And so it's a very different animal than just going in and acquiring an existing multifamily, which is what I was doing in the early years before transitioning, not even transitioning, but just expanding the playgrounds that I'm playing in. So that's kind of the mix of what we also have a 295 unit Class A asset in Northwest Arkansas, Rogers, Arkansas, specifically, adjacent to Bentonville, which you know is home to Walmart. And it's also home to Tyson, the Tyson family of Tyson Chicken. It's also home to the Hunt family of JB Hunt Trucking and Logistics. And so you've got kind of that triangle of three Fortune 500 companies there. It's a very interesting market, very compelling market. And before we acquired that deal, actually 2 years ago, a few days ago marked our 2 year anniversary of that acquisition. And before that, I really didn't know much about that market, but I've learned a ton about it since. And that's pretty much it in terms of the deals that I'm an active sponsor. I'm invested passively in a number of other deals around the country where I just have a limited partner role. And yeah, I'm a long-term believer in commercial real estate, despite what's going on now and has been going on over the last 2 to 3 years.
So how has that affected you? What's been going on over the last couple of years as an LP on your deals as well as a sponsor on your other projects. How have these rough waters affected you, Clive?
Yeah, so the Fed started raising interest rates in March of 22 and didn't stop until September of last year. And the run up in interest rates was probably not anticipated by really anyone
Yeah.
that I know of. Did their crystal ball tell them that it would go up that fast and that high?
Hmm.
So that has had a kind of that's put a cloud over commercial real estate, anything that's interest rate sensitive, and obviously commercial real estate is.
Yeah.
So that's meant that business plans have negatively been impacted. So if you bought deals like I did in late 21, early 22, and your business plan was to refinance out in 2 to 3 years into fixed rate agency debt, that part of your business plan has been frustrated because unless you're prepared to show up with a couple duffel bags of money for a cash in refinancing,
Yeah.
refinancing has not really been a viable option. So that means that we've had to stay in floating rate debt longer than we were projecting.
Hmm.
And that's put a lot of pressure on those deals. And so that's been challenging. Capital calls are a reality of what we've been navigating. I've been on the receiving end of capital calls in deals that I've invested passively. And on a couple of our deals, we've had to issue capital calls to our investors, to our LPs. Um, again, in an effort to navigate the market that is the reality that we've seen over the last couple of years.
Yeah. Hey there, if you're a capital raiser, a syndicator, or a fund manager, and you're looking for a steady flow of incoming accredited investor leads, then go ahead, grab a free copy of my new book, How to Get 20 Accredited Investor Meetings Every Month Without Cold Calling, Networking, or Chasing People. You can get that at 20accreditedinvestorsbook.com. Again, that's the number 20accreditedinvestorsbook.com. So, with all of that in mind, what are your nobody's got a crystal ball, but what are your plans for the next year or two, Clive, as far as the portfolio? Are you looking to get into more projects or just kind of stabilize what you've got, continue to play defensively? Where do you see things going over the next while?
Yeah, so I think I get the calls from the brokers about new opportunities, and I've pretty much said my pencil is down for the remainder of this year. So I'm not acquisitive in 2025.
Hmm.
I expect that will change as we kind of change the calendar and head into 26. Um, and between now and then, like I said, I'm probably more of a defensive player. That doesn't rule out the possibility of there being a wonderful opportunity that is compelling and that I jump into, but I'm not actively out there seeking that opportunity.
Yeah, no, that makes sense. So with the foray into the development space, that's a whole different ball of wax right there. That's for sure. So you've learned a lot over the last 3 years. Knowing what you know now, would you do that, go down that path again, or what do you think?
Yeah, I'm not one who lives with regrets or second guesses. So I would still go down the path, but obviously, by definition, knowing what I know now, I would be better prepared
Yeah,
to
exactly.
go down
Yeah.
the path. Um, but I have a much deeper level of appreciation for how challenging it is, and the risk profile of development
Hmm.
versus acquisition of existing assets. So I'd still go down the path. And I'm still a believer in commercial real estate, and I think that I was just on a phone call with some partners of mine, and we were just talking about the market and some challenges that we're working through. And I said, I'm an optimist in that I believe that the market 12 months from today is going to be better than it is today, and I think the market 18 months to 24 months from today is going to be even better. So that's another way of saying that is I don't know whether we're at the bottom. I'm not smart enough to say this is the bottom or the bottom was on this date or this,
Yeah.
week or whatever. But I do feel that, and one of my mentors uses a clock analogy and says, are we at 5 o'clock on the clock? Are we at six? Are we at seven? Whichever one we're at, eight, nine, and 10 is the upswing that we want to be a participant in. And
Yeah.
so I don't get caught up in trying to time the market exactly and say that it's at six now, but I'm going to wait until it's seven, then I'm going to jump in because
Yeah.
everyone else is going to do the same thing. And, competition is going to drive pricing up and you're going to miss opportunities that, again, if you're a long-term player, does it matter whether you got in at five versus seven?
Yeah, really. Yeah,
If you're
exactly.
confident that eight is going to be good and nine even better. So
Plus,
that's
you're going to
kind of
hold
where
on
I'm
to it
at.
until it gets up to 11 or 12, and then that's when you're going to
Yeah, exactly.
exit anyhow. So
Exactly.
yeah, no, that makes a lot of sense. So yeah, it's been challenging times for everybody the last few years. That's for sure, Clive. What kind of takeaways have you had having those difficult conversations on the receiving end, where people are, you're an LP on projects and they're doing cash calls, and then taking that personal experience and having those conversations with some of your own LPs? What have been some of the takeaways there?
Yeah. So one takeaway, and I would say it's even broader than the last couple of years, one takeaway would be the importance of having a solid relationship with deal sponsors. So if
Hmm.
you're a passive, I when I got started in 17 and 18, I started investing passively in institutional quality deals. I was falling in love with deals based upon the deal itself and
Mm.
place less focus and attention on the who. Uh, so it's like I love the yacht. I don't know a lot about the person navigating it, but it's a beautiful yacht. And today I'm of the view that I won't even do a deal. I don't care what the yacht looks like if I don't have a good deal of confidence grounded in a relationship with the sponsor. I don't even answer the call. I don't even, respond.
Mm.
So I got to have that pre-existing relationship. Know, like, and trust is even more important in the times that we're navigating than it was in 2016 and 17 and
Yeah.
18, where every operator, regardless of their, you know, low skill, mediocre, high skill, everyone's ship was rising with the tide.
Yeah.
Now you're starting to see that operators are differentiating themselves in navigating us through this challenge. So I'd like to think that I'm one of the operators who is separating myself from the pretenders.
Yeah. So how
Yeah.
do you separate yourself? Like what does that actually look like?
Yeah. So once you put money into one of my deals, I take a lot of pride in a communication relationship where I'm open, I'm transparent, I'm authentic in my communications, which I think some operators underestimate the importance of that.
Hmm.
And the way that I operate is I'm not operating for today or this deal. I'm operating for how does this, what kind of stead does this put me in 3 years from now and 4 years and 5 years? And hopefully investors who have invested with me will be repeat investors with me despite the challenges that we're working our way through. Because as I was just telling one of my partners, there are some things that are controllables that you can
Hmm.
point to and say, this operator could have done better with this, that, and that. There are other things that are more macro and beyond our control, and I'm not going to beat myself up about those macro things that we're
Hmm.
all trying to figure out.
Yeah.
Interest rates and where they are and where they're not,
Yeah.
cap rates, relatedly. So I think being a good communicator and just being accessible. Because I've been on deals where when things start going bad, the sponsorship team is dark. They go dark.
Yeah. Yeah. Yeah.
And
That's the
it's
worst.
like, and anyone who's in my deal, I am a text or a phone call away. And there's never going to be a situation where I'm not responding to an investor who has questions about the deal. So it's not rocket science, but little stuff like that can be the difference
Well,
between
I
someone
think that little
saying,
stuff
yeah,
is big stuff for an investor. Like communication is key. And I think a lot of people have the tendency or the inclination when it's bad news, they'd rather just zip it and pretend it didn't happen. But that's the last thing you want to do. You actually, when it's bad news, that's when you need to communicate faster and more effectively. So couldn't agree
absolutely.
with you more there, Clive. That's for sure. Well, it sounds like the development deal is kind of chugging along. Um, Again, congratulations on that. Sounds like the core properties that you have, you're playing defensive with those and just kind of making sure they make it through the next few months or year or so and until
Yeah,
things get back on
exactly.
track. So where do you see yourself going over the next 12 to 18 months? You think that you're mentioning earlier that you think that things are going to definitely get better. Where do you see yourself taking your company over that time, Clive?
Yeah, I think 2026 will kind of be the year where I return to kind of expansion mode, if you will.
Nice. Yeah.
And so I'll be less defensive and a little bit more offensive. And I think some of the deals that have kind of struggled will return to better health, if you will. And that will bode well for raising capital and pursuing other opportunities. So 2026 will be a pivotal year for me in my business, but I think that's probably true for a lot of people in this space, regardless of the specific lane that they are driving in.
Yeah, no, that makes a lot of sense. Hey, Clive, this has been a lot of fun. I'm sure there's going to be some folks listening or watching this interview that would like to connect with you. If so, what's your preferred way of people getting in touch with you?
Yeah, so I'm active on socials, but the best way to get a hold of me is just to go directly to my website. So www.parkroyalcapital.com. You go there, you have the option to sign up for my monthly newsletter. You can book a call. I can talk real estate all day, every day. And so I love hearing from people, especially if they feel that I've added value to them in some way. And you can also connect to me via my socials, which you can find on the website, Instagram, Facebook, LinkedIn. Definitely send me a LinkedIn connection. I'd love to connect with you and take it from there.
Awesome. Clive, thanks for being on the show. It's been great chatting with you.
I appreciate it, Dave. Thanks again for having me on.
All right, everybody. See you on the next one. Hey there. I really hope you enjoyed that episode. And as always, if you want to listen to more daily interview content, make sure you subscribe. And if you're an active real estate investor and you're doing deals and you'd like to get featured on this show, then just head over to daveinterviewsyou.com.